makers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London with the conversations that matter. And here's what's coming up on today's program. Britain's top antitrust enforcer opens an investigation into 8 house builders to probe potential information sharing here in the UK. Ant Group is said to have outbid Citadel for Credit Suisse's investment bank venture in China. The surprise move will face close scrutiny. And Volodymyr Zelensky says at least 31,000 Ukrainian troops have died since Russia's invasion 2 years ago, while renewing his push for more U.S. military support. Now we'll be speaking to the chief executive of Ukraine's largest private energy company on the state of the country's energy infrastructure. Now let's take a look at the European markets map. There's of course a lot of focus on what we heard last week on some of the rallies that we've seen in certain parts of the markets. There is, brace yourself for a pretty busy week on the markets, because there's going to be a very data-rich kind of week, especially the Fed's preferred measure to look at inflation. Now some of the other things we're watching out for is of course UK home builders, and some of the support that we could get from a Fed speaker. So it's going to be a very, very busy week. You can see for the moment these European stocks are kind of holding a pattern, a little bit of pressure maybe on the CAC 40 over in France. Now we're joined by Jackie Bowie, managing partner and head of EMEA at Chatham Financial. Also with us, Bloomberg's Justina Lee. So thank you both for joining us. Justina, let's kick off with you. There's a lot of chatter, of course, about these UK home builders. Like, what do we know so far about the probe that the CMA put in place?
Right. The UK CMA is kind of looking at whether these home builders have, shared sensitive information with each other. I mean, they're stressing that they're still at, the initial phase of this cartel probe. But of course, all of this is happening against the backdrop of broader concern over, the housing shortage in the UK. And as part of that, I mean, the authority has also looked into estate management charges and the general kind of poor quality of new homes. And we're seeing kind of in the markets today that a lot of these home builder stocks, they're not all down that much, but they are falling a little bit in trading today. Yeah,
and Jackie, I mean, this has, I guess, huge implications for also the confidence that people have in a lot of these home builders.
Yeah, for sure. And I think obviously we start to see some consolidation in that sector as well. And I know we're going to talk about interest rates quite soon, but they've certainly also been hit by the interest rate market. So there's quite a lot of headwinds for the sector overall.
Justina, overall, I mean, there's a lot of data, and that will kind of keep the markets very busy. I know there's some of the preferred things that the Fed is looking at. Are we now worried? Is it all about inflation, or is it really trying to figure out what the labor market does next?
Yeah, I think inflation is a big one here. I mean, this week we're going to see the core, PC deflator number. And economists are currently expecting that to have accelerated, which kind of reflects what we've seen in the CPI and PPI numbers. But I think the question here is maybe there's a bit of seasonality in that. And so to what extent is the Fed going to look through that number? But at least from kind of what, the comments from Fed officials that we've heard so far, I mean, it's one clear message, which is that, don't think about imminent rate cuts. And I think it's interesting because obviously the markets have rallied. So in a way, it's a bit circular, financial conditions have indeed kind of eased. And I think they're definitely worried about that.
I mean, Jackie, last week was, quite a funny week because you felt the economy in the U.S. was also propped up by Nvidia and Taylor Swift.
Yeah.
Jokes aside, I mean, what will actually give impetus to these equity markets going forward?
Yeah, I mean, I think the markets had obviously priced in a fair amount of rate cuts from the Fed, and that will continue to be the story this year. But, even just in the last few months, those expectations from 6 cuts now down to 4, and that will certainly drive both bond and equity markets. I think there is a concern that this last leg down in inflation might be a little tougher to achieve than maybe the markets were thinking at the end of last year.
Do you agree with that, Justina? Or again, to your very good point on tightening financial conditions, is there just a worry that inflation comes down and then it shoots back up towards the end of the year?
Right, exactly. I mean, on kind of the supply side, I think there's kind of some concern over, what is kind of the war kind of doing to supply chain issues and the kind of the cost there. But I think on the other side, there's sort of a big mystery going on among economists, which is that we're seeing this huge U.S. productivity boom. And kind of that could be the reason why, the economy has kind of kept growing, and then maybe everyone can kind of benefit. You know, you kind of have workers getting higher wages, but kind of companies benefiting at the same time. You know, I think the question here is how sustainable is this U.S. productivity boom, and are we really kind of seeing a reacceleration of the economy almost?
Jackie, what are some of the indicators? So we know that the Fed, you know, likes, for example, the core personal consumption expenditures price index, because it gives you a little bit more, and I think it's a little bit less backward-looking than maybe some of the indicators that the markets look at. I mean, apart from that, is there anything else that we should really focus on where a year ago maybe it wasn't so much on our radar?
Well, I think they're generally looking at the other main indicators. The labour data is really important for all central banks, and the Fed have indicated that. But, you know, as we've said, the US economy has been so strong, and the labour market is a big reflection of that strength. Consumers are positive. They're also cash-rich, which is helping keeping the economy stronger, which is why the market had priced in that those rate cuts would come soon, and there would be plenty of them. So that's really the big question.
Justina, it also feels like the markets have really largely been looking through some of the expectations from extra Chinese stimulus, but we had some, again, worrying or concerning data points from how much local governments were borrowing. How much does China factor into your equation?
I think it's a big one here. I mean, this week we're getting PMI numbers out of China, so that will kind of give you a leading indicator into whether kind of the momentum is picking up again. But yeah, I mean, the kind of today we got the headline that there's kind of been this state-related firm that is picking up the tab, so to speak, for a local government financing facility, and I think that kind of is bringing attention once again on these local government debt burdens that might not be kind of that sustainable, especially in some of these poorer regions.
Jackie, what's your take on China?
I think there's a lot of structural things that are undergoing change in China, and what we had relied on before for the growth coming out of China to boost global growth has certainly dissipated. Those structural changes, I think, will take years to work through. Look what's happening in the property market in particular. And I guess how that feeds into then the US market. You know, China are huge holders of US treasuries. So anything that happens structurally in China that changes that position will also impact yields in the US.
Yeah, I mean, we also have two interesting stories. Like, Ant seems to have outbid Citadel Securities for, you know, the joint venture that Credit Suisse used to have.
Yeah.
I don't know what that means in terms of regulation. You look at financials very closely. And then there's also a fund with Mubadala, again, to look for private equity in Asia. Is there going to be a lot of financial movement in that region?
I mean, there's certainly a lot of opportunity in the region as a whole, so not just China, you know, looking out beyond that. And there's a lot of private capital, sovereign wealth, looking to allocate into that region. So they must see the opportunities there for growth. Yeah. I think you've got to look at the difference between China and the rest of the region, though, and not bunk them all together as one.
Is there anything else that's on your radar? I know there's always kind of like gold indicators or inflation indicators. We're almost at the end of the earnings season, so I don't know whether that's a sigh of relief, Justina.
Yeah, I think definitely, and I think it's a sigh of relief to investors as well, because it's been a pretty solid earnings season. And I think one of a few features coming out of the season is one, you know, the U.S. kind of is still beating estimates, and that's being really led by the technology stocks rather than a lot of other sectors. And I mean, I was reading JP Morgan's summary, and one thing that really stood out to me was that the gap between kind of U.S. and Europe earnings growth is the highest in a very long time. And of course, that's reflected in the equity market trends we're seeing. But it's kind of interesting because there's always someone trying to say that, you know, European stocks are way better value. But I think if you look at the earnings trends, I mean, that tells you why.
Are European financials better value, Jackie?
Well, certainly if you're looking for some cash yield, European financials are looking pretty good. If you look at everything that came out last week, you know, the European banks are flush with cash. Their net interest margin is extremely wide. They're all doing share buybacks, increasing their dividends. So if you're investing for cash returns, European banks seem to be the place to be.
And this is despite commercial real estate concerns.
Yeah, you know, and we've looked at exposures to commercial real estate from various financials and other lenders. It certainly seems to be more of a concern in the US, particularly with regional banks in the US. And until we see those valuations in real estate reset, it's hard to know where it will land. They've certainly been provisioning for some of those losses, but the question is it enough?
All right, thank you both. Get us started there for the week. Jackie Bowie, a managing partner and head of EMEA Financial, Chatham Financial, and Bloomberg's Justine Ali. Now, coming up, Ant Group has outbid Citadel for Credit Suisse's investment bank venture in China. So we'll dig a little bit deeper into what we know from this exclusive Bloomberg scoop. That's next, and this is Bloomberg. Well, Bloomberg has learned that Jack Ma's Ant Group has outbid Citadel for Credit Suisse's investment bank venture in China. UBS now faces a dilemma whether to choose a higher domestic bid or a lower one from the offshore Citadel, which Chinese authorities are said to prefer. Now, let's get more from Lulu Chen, who leads Bloomberg's Asia investment team live in Hong Kong. Lulu, thank you for joining us. So what are the key things that will determine the outcome?
Well, two things. One, there's pricing, and then there's regulatory approval. Sources have told Bloomberg News that Ant outbid Citadel Securities for the license, the JV license of investment banking for Credit Suisse. UBS, who is the current owner, now has to make the choice of which to go with because regulators, we've been told, are leaning towards offering that license to a global buyer instead. When the license was created, it was to attract more foreign players into the market. So UBS has some pros and cons to make.
So, Lulu, we also have news of $1 billion private credit deal between Goldman Sachs and Abu Dhabi-based Sovereign Wealth Fund. What more can you tell us about that?
Yeah, lots of stuff happening in the market today. For that deal, while private credit is a crowded trade in the U.S., it's just picking up in Asia. So the deal that Goldman struck is very similar to what the agreement that they made with OMERS. They are looking for more access to deal origination in Asia Pacific. And for a long time, Middle Eastern wealth funds were not interested in the space because the returns were too low. But with the higher interest rates now and funds looking for more stability amidst all this market chaos, private credit trades in Asia are increasingly becoming more interesting, which is why they set up the partnership with Goldman.
Lulu, thank you so much. Lulu Chen there, who's looking, of course, at all things financial in Asia. Now, we're just also getting pictures live from Brussels. Hundreds of tractors are taking over the streets of Brussels. They've returned to the Belgian capital almost a month after the first farmers' protest brought much of the city to a halt. Now, today's protest comes ahead of a meeting of European agricultural ministers, the EU, I guess, trying to quell some of the farmer discontent. Countries led by France have asked the Commission to monitor grain production in Ukraine more closely, as the bloc seems to be pushing to extend the suspension of some of the import duties on the nation's products for another year. That's according to Bloomberg sources. Of course, we'll have a full roundup of everything that's going on in this meeting of agricultural ministers. Now, coming up, Nikki Haley loses a key financial backer after a crushing defeat to Donald Trump in her home state. We'll discuss where the loss leaves the race for the Republican presidential nomination. That's next, and this is Bloomberg. Now to U.S. politics now, where a major funder has pulled the plug on Nikki Haley's presidential campaign. The announcement from Americans for Prosperity Action, backed by Charles Koch, comes after a big loss for Nikki Haley in the latest Republican primary. Now, for more on all of this, we're joined by Leslie Vinjamuri, director of the U.S. and the Americas program at Chatham House. We were joking that Leslie is the most popular guest at a dinner party, but I know that's right, Leslie. Also, because people really want to understand what is going on and who will be the next president. So what do you make of what happened in South Carolina?
Well, it's as expected. People predicted that Trump would do very, very well. The polls have been actually remarkably accurate. He's come, a little bit down from where polls predicted him to land in Iowa, New Hampshire, now South Carolina. So just under 60% of the vote. But again, the thing I think to notice here, the headline news is that Nikki Haley is not coming through strong enough to really make a bid for this nomination. But right below that headline is that she's pulling away a very substantial number of primary voters. And that doesn't signal well for how Donald Trump will do going forward. He's also not done especially well with African American voters. With independents aren't looking very favorable towards Trump. And then there's a split in the Republican Party. Nikki Haley has been pulling wealthy Republicans. Certainly, this is what we're seeing in South Carolina, and Donald Trump is pulling those rural voters. And I think when we move to a general, that contest for the rural working class voters is going to continue to inform a lot of what we see between Nikki Haley, between President Biden and Donald Trump. So, as expected, again, as you said, donors are now making their calls. That will accelerate the thinking on Nikki Haley's decision. But she is laying the groundwork for a run in 2028. She's now very visible on the national stage. And as we know, this is a former president who has a lot of time in the courtroom ahead of him. So paving that way for an alternative is a very wise move on her part. So yes, a very significant victory for Trump, but with another story to tell for sure.
Yeah, Leslie, I mean, it was a pretty bruising defeat given it was her home state. But and basically after that, she's been saying, well, Donald Trump cannot win in November. Like, what do the polls show us? If there was an election today, Donald Trump versus Joe Biden, who has it?
Well, it's very close. But again, as we know with the polls, first of all, it's going to come down to a few states because of our electoral system. And secondly, it's not, who likes Donald Trump and who likes Joe Biden. It's how much do they like them? Do they like these two candidates enough to turn out and vote? It's all we hear this and we continue to forget. We sort of turn back to the polls, but it is all about turnout. And there are so many known unknowns. How will young voters feel about President Biden when it comes to October and November? Some of that is linked to the war in the Middle East. Some of that is linked to how he campaigns, how he does on the campaign trail. And on Donald Trump's side, there are a lot of people that are meh about the former president. And that's what we're seeing in the primaries. Can he get people to turn out, and can he get independent voters? And on that count, it's not looking so great for the former president. So I think that, this is a very long road ahead. If the race were today, I'm not sure that I would put money on it. I would probably guess that President Biden would eke through. But this is going to be a difficult several months and a very exciting, in one sense, several months for U.S. politics.
So the really important one is, of course, then Michigan, right? And this is an important state that I think Donald Trump narrowly lost to Joe Biden in 2020. So how long does actually, if it doesn't go well for Nikki Haley, how long can she still stay in the race?
Again, I think Nikki Haley has made it very clear that she will stay in the race through Super Tuesday. The other thing to watch on the Democrat side is that, Gretchen Whitmer has come out for President Biden on the Democrat side, but there's a counter movement to sort of encourage Arab American voters in Michigan to stay home. And that, as we know, when we get to a general election, could have a significant impact on the outcome. The other thing that I haven't mentioned that I think, again, we need to watch, when you look at the breakdown of those supporters of former President Trump, he's really pulling the evangelical vote. This is a very, very significant vote. And that, again, will link up, the passion that those voters feel for Trump, the antipathy that they might feel for President Biden. Some of that will link to, again, the war in the Middle East and how that plays out. Some of that is going to be linked to the politics of the pro-choice or pro-life vote in the U.S. So there are a lot of issues that are going to continue to unfold at the headline level that will influence whether or not these voters, feel the enthusiasm for two candidates that, we hear a lot about the lack of enthusiasm for President Biden. But if you look closely at those numbers, again, Trump isn't pulling as strong as he needs to be confident of a win in November.
But Leslie, again, for Joe Biden, I guess on the Democratic side, is it an age concern? And if it is there anything that the Democrats can do to get back? I mean, he's actually not doing great in the polls given where he is and what he's done for the economy.
That's right. I mean, we know that the age concern has been, top of story for many months now. It sort of got an uptick a few weeks ago for reasons that are well known to all of us. And I think for the campaign, those surrounding him, can they really counter that by making a tough sell on the success that the president has had? Will they be able to persuade young voters in particular? We cannot underestimate the significance of young voters in this election. They mattered last time. They will matter this time, but it's unclear in which direction. And that age factor, I think, really is a significant one. Whether he can demonstrate a degree of resilience, a high degree of energy, but really sell his policies and put, forward that message about he's strong on climate. He's, committed to a number of economic policies that are beneficial to young people. But so far, that message is not coming through, and that could really hurt him.
Leslie, thanks so much. The Vinjamuri Brief. What a way to get started on this Monday morning. Director of the U.S. and the Americas program at Chatham House. Coming up, we talk Ukraine. This is Bloomberg. Well, Britain's top antitrust enforcer opens an investigation into 8 house builders to probe potential information sharing. And Krug is set to have outbid Citadel for Credit Suisse's investment bank venture in China, but the surprise move will face close scrutiny. And Volodymyr Zelensky says at least 31,000 Ukrainian troops have died since Russia's invasion 2 years ago, while renewing his push for more U.S. military support. Well, welcome to the Pulse, everyone. I'm Francine Lacqua here in London. So Volodymyr Zelensky says 31,000 Ukrainian soldiers have died since Russia's full-scale invasion of the country 2 years ago. There's, of course, a lot that we need to discuss, including what this means going forward. For more, we're now joined by Bloomberg's EMEA News Director, Rosalind Matheson. Ros, thank you so much, as always, for joining us. So, I mean, the comments were heart-wrenching. We try and figure out also militarily. I know it's something that, tactically you look at very closely. But what did you learn over the weekend?
It was interesting to see these comments, obviously, as Russia's war in Ukraine enters its third year. It was a mixture of defiance and a sense, of course, of calling out to the world, we need help and we need it now. There was a message in some of it potentially for a domestic audience. Again, people in Ukraine who've been going through war now for 2 years, slogging through that. Questions around mobilization, about the potential need to bring more soldiers on. Zelensky mentioned for the first time, again in a while, casualty numbers for the Ukrainian military. Certainly a sense there of fatigue. How can we push on? But then that message also out to the rest of the world, which was a timeline quite clearly saying we need these weapons now. We're running out of time. We need them not just agreed, but we need them coming into Ukraine because Russia is starting to make advancements on the ground.
So, is there any sign that U.S. aid could actually be unlocked?
It seems very unlikely to see it come anytime soon. It's just really locked down in that political environment in Washington at the moment. And also we've got the US this week focusing more on domestic affairs, which is the possibility of a government shutdown. As soon as Saturday, they could have some ministries start to shut down. So they're going to be very focused on their own affairs this week. And right now, there's no great momentum in Congress, certainly on the Republican side, to push that through.
Ross, thank you so much, as always. Bloomberg's EMEA News Director, Rosalind Matheson. Now, as the financial aid debate continues for Ukraine, the country's energy infrastructure remains under threat from military attacks. Well, DTEK is Ukraine's largest energy infrastructure developer and private energy supplier. I'm very pleased to be joined here in the studio by the DTEK Chief Executive Officer, Maxim Timchenko. Mr. Timchenko, thank you so much for joining us. Now, Russia has continued to attack some of the energy infrastructure, and that lasted through the winter. Can you update us on what kind of infrastructure has been hit and how much money is needed to reconstruct that?
So we had energy war for at least 2 years with Russia because of massive destruction of our energy infrastructure. But we're here. So we have enough power in the country. We have enough gas. We have enough coal. We're well prepared for this winter season. But the key success factor for us is air defense systems. And the situation is very fragile now. So we manage not to have blackouts during this winter. We're coming to the end of this winter, and we are quite positive how it will go. But everything can be turned around because of air defense, because of lack of ammunition, because of current situation with military equipment supply.
I think the government has said that they're looking at some kind of physical protection for some of the energy assets. What does that look like to protect your assets?
Of course, we did all this preparation during summertime, so we built concrete blocks, sandbags, so everything was done. But it cannot be good enough if drones or missiles hit directly to transformer or other pieces of equipment. It cannot be protected without air defense systems.
So can you give us also an update on how energy consumption is looking right now? Is it less than it was a year ago?
So it started growing. You know that positive news coming from our economy, the GDP is growing about 5% in 2023. Of course, energy consumption is directly linked to that. That's why for us, it's not only about frontline, it's about economy. And we have to win this economic war as well. And more than 1 year ago, we were discussing green counteroffensive.
Yes.
And I can proudly say that during this wartime, we managed to build new wind farm. Now we're in development stage of new projects, wind farms, utility battery storage, grid modernization. So basically, we brought here to London and to Japan last week projects for the value of $10 billion.
No, but this would be financed. So is this you also issuing Eurobonds to pay for it? I know there was a question of the central bank asked, for example, you to be able some of your debt in foreign reserves, which I think the IMF was not 100% fully behind. How do you raise 10 billion?
Yeah, so my point is that today we have companies ready to deliver. We have knowledge, we have experience building new projects during the war. But the key problem for us is access to capital. Of course, we cannot get commercial funding. That's why any funds coming to Ukraine should be backed by foreign governments. And today, what is important for us is to continue serving our current debt, Eurobonds. And one of the issues we have now with the National Bank of Ukraine is buying foreign currency to pay our coupons and repayment of these bonds. And that should be resolved. And we hope that...
So you're in full support of this, of course.
Of course. Yes, we do that, and we hope that IFIs will be more active working with the private sector. Today, as I said, to win economic war, private sector should be one of the driving force for that.
So you talked about green energy, and this is why you were in Japan and here in London to, I guess, speak to investors. What does the energy complex, including green energy, look like in Ukraine in 3-5 years from now?
So today, as you know, more than 56% of our power produced by nuclear power station, which also is seen as a clean energy. And only about 10% is renewables, wind and solar. So our position is that Ukraine has enormous potential in development of these technologies, solar, wind, battery storage. As I said, we developed new projects. By end of this year, we'll have about 1,000 megawatt of capacity new projects, which will, with a budget of more than 1.5 billion. So these are the projects we want to bring here, and we want to convince investors that Ukraine cannot be seen as a war zone country. Of course, we have on front line, but again, it's the best way for us to lead by example. So we managed to build this, invested 200 million. Now we're at final stage of financial closing, another project for 150 million euro investment for wind. And this is good examples for investors coming to Ukraine, at least start developing new
Mr. Timchenko, of course the risks are higher because you're always a target, right, as you said, of drones. So does it, again, when you I also want to ask you how much of percentage you still have of coal usage. But when you speak to investors, do they worry about some of the targets actually being attacked, or their worries about funding and just where the war goes?
Of course, both. So talking about physical destruction, of course, coal-fired power station is not comparable with wind, so much more resilient. And that's already we had the experience that if they hit one turbine, all the rest of wind farms still operational. So of course we need risk coverage for that, and political risk and war risk. That's one topic for investors. The other one is how to execute during the wartime. So in our case, we get all equipment delivered to the border of Ukraine, and they will take full responsibility and ownership of this and bring to the site and erect turbines. So we know how to do that. But I am not asking investors to come today and deploy hundreds of millions. Spend 18 months for development. Get understanding of Ukraine, all this potential. Take into account that Ukrainian power grid is connected to European. So these wind and solar farms can be built in Ukraine to export power, green power, back to European Union. And that's basically the point of President Zelensky, that Ukraine can become green energy hub for Europe.
But this would be the day after the war stops. Or are you thinking of this now?
Development should start now, so that investors can get this first move advantage.
How long are you expecting the war to last?
You know, it's difficult to answer this question for any of Ukrainians. In our case, we know that we are in Ukraine, we in charge of energy security of Ukraine, and we do everything possible and impossible so that we bring it to the victory.
And are you positive about the capital funding, about investors listening to what you need and being prepared to put money?
Investors are open, they listen to us, but probably we need to start actions.
Maxim Timchenko, thank you so much for joining us today. That was the Chief Executive Officer of DTEK, Ukraine's largest private energy supplier. Coming up, more of our interview with one of the UK's richest men, the INEOS chairman, Jim Ratcliffe. We discuss EVs, and of course we also discuss football and his new stake in Manchester United. That's coming up shortly, and this is Bloomberg. Well, China's BYD has debuted its most expensive car, the fully electric supercars, pitted against some of the gas-guzzling options from luxury rivals such as Ferrari and Lamborghini. The price tag just over $230,000. Well, joining us now is Bloomberg's Danny Lee. Danny, this is quite exciting. It's a nice-looking car. Why has BYD got Ferrari and Lamborghini in its sights?
Yeah, it's managed to conquer the mass market, particularly in China. It's looking to go around the world, but it's now looking at more expensive luxury options for customers, particularly because these are high margin and highly profitable. And so by pushing into this segment where in China in particular there's not really a lot of competition for these really expensive EVs, it's looking to make a name for itself. And particularly when you look at the Yangwang U9 stats of 0 to 100 kilometers an hour in 2.36 seconds, top speed of 310 kilometers an hour, it really puts someone like Ferrari or even Lamborghini very much in the shade, and where they're still developing their own concepts and products, particularly in the fully electric space. So yeah, BYD, first blood to them.
So BYD, again, I guess the question is, would you buy a BYD supercar rather than a Ferrari?
I think in China, they've clearly put a big statement out, and especially in where China, the market for luxury is really a big one, particularly for European brands in particular. So this is one where we'll have to wait and see just how much of a pickup they see in pre-order sales and in particular sales they can get across the line. But this will be really helpful for them. High margin, high volume, highly profitable kind of vehicles, particularly at a time when China's going through a real autos price war.
Yeah. So Danny, very quickly, I mean, is this good for basically the more affordable EVs, or is it really that they're trying to make money of these supercars?
I think it's good news on both fronts, but particularly for these affordable EVs, BYD then has the confidence to go even lower on some of its more affordable vehicles. And we have seen that already in China, where it's looking to cut its prices even more. But we'll have to see in somewhere like Europe, where it's expanding at the moment, just how willing it is to compete more effectively and cut its prices to raise sales.
Great. Thank you so much, Danny Lee, there with the very latest, of course, on this pretty exciting launch from BYD. Now, in another vehicle debut, INEOS Automotive has revealed its latest model line on Friday, the Fusilier. I spoke with Jim Ratcliffe, the chairman of INEOS, and asked him whether he believes in EVs or whether the issue is actually being pushed by regulation for government.
if you're in the automotive world, then you've got a responsibility to try and improve the world's sort of carbon footprint for the automotive fleet. So the electric vehicle definitely makes a huge contribution to that.
Yeah.
So.
Are you in it for the long haul? How much money are you prepared to commit to this?
Yes, I think you're either, you can't be half in. You know, you have to be fully in, really. So we are fully in. It's a proper vehicle, and the volumes will be quite high. So we're definitely in it for the long term.
I mean, it's a beautiful vehicle. So the proposition today,
do you think so?
I think so, is basically either fully renewables, battery,
correct.
or actually you can do a little bit of both. Are you confident again that governments will give you the time to adapt more?
Well, I think governments are still sort of feeling their way forward. I think the important thing is that the trajectory is the correct one. In other words, that we're constantly reducing carbon emissions. So, but in terms of the navigating that route, I don't think anybody's clear what all the solutions will be today, because there are various solutions. Obviously, there's electric, there's hydrogen, there are hybrids, there's range extenders and things like that. So I think where we'll go, and what we believe in, is that the electric is definitely an offering which we'll make, and it's very good in certain circumstances, but we'll also include a range extender in some of the vehicles where you've got the fallback of being able to fill it up at a fuel station.
It's a big week also for United. You've been wanting this for a while.
Yes, quite a while. Yes.
I think you said that this is going to be a hard fix. What does that mean?
Well, it just means it's not a light switch. It's not going to change overnight. So it's you have to, we've said it a couple of times, you have to walk to the right solution, not run. I mean, quite often in football, people just get the checkbook out and they think it's all going to be solved in the summer transfer window. It's not, I don't think in the modern world, that's proven many, many times to not end well. So, a lot of this is about taking a step back and looking at the organisation, looking at the people in the organisation, looking at the environment. At the end of the day, you're just putting 11 players on a football field and you want to win a football game. But it's a very complex organisation now that gets you to the point where you've found a winning formula. So that will take us 2 or 3 seasons to get there.
But do you think you can compete with current finances?
With our current finance? Yeah. I mean, Manchester United is one of the biggest clubs in the world. So, whether you like it or not, that obviously influences the quality of football you play, because you can obviously afford better footballers. So, I think, in my view, Manchester United, in terms of its brand, is the biggest club in the world. It's not been successful on the field for the last 10 years, as it probably ought to have been, but it's got a fabulous history. And if we can get it back to where it should be, which I believe we will, then, it's going to be a very, very big enterprise.
Would you take it private?
No, I don't. All I'm focused on is improving performance on the field. I don't really get distracted by those types of things. It's just about winning football matches. That's what we get our kicks out of, so to speak.
So this, I guess, is what you love. Do you have confidence in the manager?
Well, it's not. This is not about the if you look at Manchester United for the last 11 years, it's not done terribly. None of the managers have done terribly well. There's been a whole series of managers, and there have been some really good coaches that have come to Manchester United. So, the conclusion from that has to be that the sort of the environment for the coach has not been a successful one, because none of them have been successful. And Eric's working in that same environment. So our focus is on how do we change that environment and the structure that provides the coach the environment in which he can be successful.
So can I understand from that he has your support? And what are you talking about? Is it culture? Like, what needs to change?
Well, it's an elite sport. So you need an environment which is driven. It's going to be competitive. It's quite intense. Because you're an elite sportsman, you need to be in a driven environment. But equally, you need some support, you need some warmth, and they haven't. And we need the people with the right skill sets in the right boxes. So it's a bit of a combination.
Would you bring Mason Greenwood back?
No, I don't want to talk about individuals, really.
Because it's too soon, or because he's controversial?
Because I don't want to talk about individuals. I don't think it's appropriate for me to talk about individuals.
Okay, you've asked for public finances or public money to help with new stadium.
No, I haven't. I haven't asked for public finance. What we've said is that there is another option with Old Trafford. We can go down our road, which is where we're going, to refurbish the existing Old Trafford, which will give us a great facility of 80 or 90,000. and will cost about $1 billion. But there is another scenario which could maybe act as a catalyst to regenerate that part of Manchester, which is a little bit neglected and run down in places. It's Trafford Park, which was the heart of the Industrial Revolution. You know, it was the first industrial park in the world. But today is not all of it's in great shape. So it could act as a catalyst for regeneration. And there's been a lot of talk in government about levelling up and investing money in the north to raise, to bring some big projects to the north. And there is an argument also that a lot of our football DNA in the UK is in the northwest. You know, those three teams in the northwest have won the Champions League 10 times, and London's won it 2 times. So why shouldn't there be a Wembley of the North? So if we did build a much more ambitious project with a brand new stadium, then that would be very fitting for England to play for the FA Cup final, for the Champions League final, that sort of thing, which would be great for the north of England, so they don't always have to schlep down to London to watch a football match.
That was Jim Ratcliffe, chairman of INEOS, and of course we'll have plenty more from that interview throughout the day. We're also talking trade. That's coming up next, and this is Bloomberg.
WTO, we'd have to invent it. And so the fact that the WTO is going through its own growing pains, so to speak, and yes, it may need to be reformed, and there are many issues like dispute settlement system, the challenges with multilateralism as a whole. So yes, it has to adjust, but it doesn't mean that it's no longer fit for purpose.
That was Pamela Coke-Hamilton, their executive director of the International Trade Center. Now, a decades-old global consensus has allowed e-commerce to grow without custom charges. But now the issue is set to be in the spotlight as the World Trade Organization gathers in Abu Dhabi.
Streaming a Netflix movie in South Africa, an international Zoom call with a doctor in India, downloading an e-book on a beach in Bali. They're just a few of the online transactions that could face new taxes. That's if a 26-year-old e-commerce deal falls apart. The agreement blocks tariffs on digital transactions, wherever they occur in the world. It obviously benefits major US tech companies like Amazon, Meta and Netflix, but it's also good news for smaller firms that collect data and do business in international markets. And it's big money. The US exported more than $600 billion of digital services in 2022 alone, with the UK at over $300 billion. When the World Trade Organization meets this week, it'll have a lot on its agenda. But perhaps the most pressing is renewing this deal, which expires on March 31st. They've re-upped it every 2 years since 1998, and some countries want to make it permanent. But experts think Indonesia, India and South Africa could oppose it entirely, and it would only take one to scupper the deal. The tariff revenues that governments could generate without the truce might not be massive, but the move would be hugely symbolic and could represent a big win for the global south. It may also be the biggest protectionist threat the internet has ever faced.
Well, those are some of the issues in the spotlight as the World Trade Organization gathers in Abu Dhabi this week. Up next, a Bloomberg Brief with Danny Berger and Manus Cranny in New York, and this is Bloomberg.